Good afternoon to all the participants in our annual Rupee Money Conference. I am Venkatesh Vijur, Chief Strategy Officer at Almas. What a discussion, what a file chart. Of late I started loving girls. They are more straightforward and more forthcoming. In fact, it is proved that in a trading also they are apparent when it comes to profits. Just to brief something, something she said, it's a music to my ears. She was telling intervention is not a strategy to keep the currency stable. It was never. Okay. And when we talk about 5 trillion economy, okay, and she says finance is the brain of the economy. So my thought always, we controlling the economy, controlling the dollar rupee, controlling anything, it will not do any good to us. Only a free man through free enterprise, the economy will grow. That time has come. That was the theme, and that I have been telling from last 2 decades. It's going to be a reality shortly. Thank you, Rajeshwari, for that brilliant speech. And as again, another thing she said, market first, regulator cannot be first. It's a brilliant speech. I think all the participants loved it. Now I am introducing another interesting panel, that is evolution of Gift City, the future of global financial center. You all good to know that, as Mr. Padmanabhan sir said, that initial stage he was involved in it. Lot of things were coming with the Gift City. It was really surprising to me, and it's a we therefore thought that we'll introduce in the panel the evolution of Gift City, how it will help to the future. For that, we have none other than Supriyo Bhattacharya, General Manager, International Financial Services Authority. His primary responsibility is laying down regulations for banking business in International Financial Center. He is also managing the Indian banks and foreign banks licenses at the International Finance City. Prior to joining the International Finance City, he was the Deputy General Manager at Reserve Bank of India, who was covering regulations and development of FX derivatives. By qualification, he is a Bachelor of Commerce Honors, Certified Associate of Indian Institute of Bankers, Diploma holder in Treasuries, Risk and Investment Management of Indian Institute of Bankers and Finance, and he is also ECA Diploma holder. Over to Mr. Supriyo Bhattacharya for the panel, Evolution of the Gift City, the Future of Global Financial Center.
Thank you, Mr. Venkatesh, for the kind introduction. And let me take this opportunity now to introduce our esteemed panelists, starting with Mr. Anshul Chandak from RBL Bank. He's the head financial market sales of RBL Bank and is also the chairperson of the governing body of the RBL Bank branch that is in IFSC. He has over 16 years experience in various financial market products with HDFC Bank and Kotak Mahindra Bank prior to joining RBL. He has been with RBL for the last 10 years and basically has been instrumental in building the financial markets business from scratch. So welcome, Mr. Chandak. Then I'm also happy to introduce Shri Chetan Barkhada from Anand Rathi International Ventures IFSC Private Limited. He is the CEO of Anand Rathi International Ventures here. And he has over 23 years experience in complex hedging in currencies and derivatives segment. He's a financial services professional with a broad-based background in stocks, commodities, treasury, strategic financial management, and execution. And in the past, he has also been the executive director of Anand Rathi Commodities Private Limited and head of commodities and currencies business at Anand Rathi Group. So welcome, Mr. Barkhada. And finally, we have Shri Vineet Bhatnagar, who is the managing director and CEO of Philips Capital India and UAE, and also manages the business affairs of other Philips Capital Group companies in India. He has more than 25 years professional experience in banking, financial services and technology, and in-depth understanding of various listed and OTC markets such as equities, fixed income, currencies, and commodities. Welcome, gentlemen. And I would like to just start off the session with a brief outline of what I think are some of the important points pertaining to IFSC in particular. And really, when I was requested to lead this session, I looked at the the heading of the session, which is the evolution of Gift-City, future global financial center. And I looked around and I found a very good definition of evolution. What is evolution? And evolution is essentially, to take away the biological definition, which everybody knows, and bring it down to really the brass tacks, it's basically a process of change, when from a lower or a simpler state to a higher and a complex state, which gives larger benefits to the system as a whole. So that's evolution. And how does evolution happen? Evolution happens through a process of what it's called natural selection in biology, where certain characteristics of an animal or a group of animals makes it able to withstand change or better adapt to the change in the system which is a part of, and thereby it allows that animal or that group of animals to survive and thrive over other groups of animals, and thereby become the dominant group of animals in this. Now, why I bring this is that the environment, the international financial environment, is, to my mind, is probably at the doorstep of some major changes. And in whichever areas you look at, we are either at the threshold, or even some people say we are already into this change in that system. So the environment is changing, and if I might just take a few minutes to discuss what I mean by that, is basically that the system that we today are largely in is what has come from the 1970s. After the fall of the Bretton Woods system, we had this sort of a free-for-all exchange rate mechanism and flow of capital from the west to the east. And all these things we have been comfortable with. There have been disruptions, but broadly the system has maintained itself over time. But today, I think there are fundamental questions about how long that system can sustain. The future of the US dollar, the future of the US as the largest economy in the world, the rise of China in one aspect, and then you have the other aspect of the fundamental questions about what is money, what is finance, what is money, the question of crypto assets, cryptocurrency. So all this, to my mind, tells me that the environment that we have had for the last 30, 35 years, or even longer, I mean, it's more like 40 years, 40, 45 years, probably the next 40, 45 years, or even, if you next 20 years, will probably be totally different or largely different from what we have seen for the last 40 years. So the evolution has to happen. The environment will make us evolve, or if we don't evolve, we will not be able to survive. So in that context, IFSC as an idea starts with certain advantages as well as disadvantages. The disadvantages are obviously known, that we are trying to do what Singapore or other places started doing 25 years back. So we have that lag where we are now trying to do certain things which others have already done with various degrees of success. But if you turn that around, that is also a source of advantage for us, because many of we are flexible. We are not hard-coded. Our operations, our regulations have the capacity to adjust and acclimatize to various other possibilities in financial markets, but whether it be how the transactions are settled, what kind of assets are used to collateralize transactions, and even the various forms of assets that can be issued. So I think therefore that IFSCA and IFSC as a jurisdiction, although there is a long way to go, there is no doubt about that. But we start with certain the fact that we are a small jurisdiction which just started, and by started I mean I would really say that the start of IFSC is from the formation of IFSCA, where it had only one goal, rather than the existing regulators trying to make time for setting this up. There, I think we are now in a position where we are able to take the best out of the international best practice and try to fit that in within our system of laws and regulations and how the things are done in India. So there is this exchange of information that is going to happen over time between how transactions are done internationally, how transactions are done in India. And IFSC, to my mind, can be a very important bridge between the two, and try to get those ways of doing business into India, apart from the other advantages like capital flows, which the speakers will talk about. So just to leave, before I stop and ask the panelists a few queries on their areas, I would just like to throw, again, continuing the theme of how people adopt, how people adapt to the changing environment. So there are two types of adaptations. This is the biological adaptation, where you change your bodily function, like for example, people have higher altitudes. People who live in higher altitudes are able to withstand the fact that the oxygen there is less, whereas the people living in the ground level or the sea level will have trouble adapting to that. So that's one kind of adaptation. And then there is the behavioral adaptation, that how you go around on a daily basis, that adaptation. So in the context of IFSC, biological adaptation for me, for IFSC, would be basically in one sentence that allowing transactions which are not allowed in India or not allowed to be happening in India, can they be allowed out of IFSC? So that to me would be a biological adaptation of IFSC. For example, we are all very eagerly waiting for the crypto assets bill, right? Why not think of IFSC as a ground for where crypto assets can be listed or traded and securely, because so that is one area where a biological adaptation, where you change the bodily function and allow functions which are not permitted in India to happen here. And when I say behavioral adaptation, as far as IFSC is concerned, I talk about benchmarking the regulations here, and which has been done to a large extent. That our regulations here are benchmarked to international regulations, by which I mean regulations that are prevalent in Singapore or Hong Kong, or even European regulations or UK. So that is the behavioral adaptation that the people who are coming here will have to do. So hopefully, our hope is that with these two kinds of adaptation processes, we will be able to, not only deal with the current environment, but also going forward, adapt to the new environment that probably is very, very close at hand. And so that is, and the people who are and the panelists who are with me in this session are really at the forefront of that adaptation process. So this is I would like to now ask them to a few talk about how they're adapting and how they see their respective areas developing. So if I might start with Mr. Chandak. Now you are a bank. You have a presence in IFSC. And my question to you would be, how do you see the banks playing a key role in providing the financial services, which is your staple, And then also, how do you see helping in raising of funds by Indian corporates?
Thanks, Supriyo. Glad to be here today, and thanks for sharing your thoughts. IFSC Gift has provided a beautiful platform to banks and Indian corporates where they can leverage various product offerings, which otherwise was a very restricted activity between few financial institutions and large conglomerates. Today, when I meet clients across length and breadth of the country, the Indian corporates, one clear trend that emerges post-COVID is that more and more Indian companies will become Indian MNCs. And when I say Indian MNCs, I don't mean that they just would export their goods out. What I mean is they would look to manufacture goods outside India, would look to trade goods outside India. And for that, when they will set subsidiaries outside India, I think banks like us who are present in GIFT have a platform to give these products, which will help them with their liquidity and funding solutions. So whether it is for their long-term requirements or short-term requirements, working capital, fund-based, non-fund-based, there are a plethora of products that have been allowed by IFSCA, which will be offered to these companies, which will help them grow on their global footprint. Also on the onshore front, a lot of clients in terms of trade financing solutions on ECBs, on bias credit, are few things which they can avail and benefit out of the gift setups of the banks. Also, if you look at today, a lot of MNCs which are present in India and have been around for many years, look to have a more holistic approach and relationship with their bankers. And that's where we can go to their home country and today and help them with their liquidity situation. And today, I must compliment IFSC and GIFT officials for being very proactive and flexible and giving a lot of enablers to banks like ours, like income tax holidays for 10 years, no custom duty, GST, lower MAT, which has brought this whole solution very cost effective. Also, traditionally, what banks would typically do is that borrow from money market and lend it to the corporates. Today, there are several other mechanisms that IFSCA has opened up for the banks to raise funds. Just to give an example, deposits to be taken from non-resident Indians. Today, just to bring some context on numbers, approximately 90 lakh crore worth deposits non-resident Indians hold outside India. Even if a fraction of that amount moves to the banks present in the gift city, can create huge amount of liquidity at a cost which will be far lower than what it is today. This is a huge avenue and eventually lower cost, meaning corporates will benefit as these benefits will pass to them when we lend. The other window that has been opened is this Indian residents, high net worth individuals who under LRS route can also open account with gifts. Of course, there are some minor regulatory challenges that we are still ironing out. But once this opens, today, a lot of, we've seen this market growing 35-40% compounded for last 5-6 years and is as big as $20 billion as latest as last year. A lot of this money is being parked by the resident Indians in their accounts in US, which is a very expensive affair today for them to run these accounts locally there. So if these funds can also be parked with the banks at IFSC GIFT, again will give banks liquidity in the form which will again create low cost of funds and overall system will benefit. So these are few very interesting things which we believe that we will work with our corporate clients as well as individual clients in India to scale up the whole setup that we have at GIFT.
Thanks, thanks, Mr. Chandak, for that comprehensive reply on what banks are looking forward to provide out of IFSC. If I might move to Mr. Bhatnagar, and Phillip Capital has already operations in 15 countries. in Asia and around the world. So you've already opened a branch in IFSC. So what are the opportunities that you perceive going forward? And I think your basic focus areas are in the areas of global market access, portfolio management, and AIFs. So how do how probably, I mean, the question probably is that how have you justified opening a branch here, and what kind of opportunities do you foresee?
Thanks, Supriyo, for the question, and I'm happy to be a part of this discussion. Yeah, you are right that we are a multinational. We obviously therefore have a multi-country presence. If you look at it, the justification to become a domestic player in India, which is about 20 years ago, was clearly based on the appeal of the domestic market itself, both from the local players and from the foreign players who are interested in Indian markets. So by incorporating our business in Mumbai, we were able to tap both the potentials, right? But the larger, the larger integration of the market would obviously come about when we are able to integrate India and the rest of the market slightly more tightly, which is exactly what GIFT and through the recent, single regulator regime of IFSC provides. So it was actually a no-brainer for us. Sitting in Bombay as a domestic, financial services house, when guidelines started coming about for Gandhinagar, GIFT City, IFSCA, it was easy for us to look at this as an opportunity to look at one, integration, another, buffering. So the point that you were making earlier, Supriyo, is so much apt. India has been a regulated financial market for at least 3 decades, right? And the market is developed organically in a particular fashion. So to expect a big bang change, for a country like India and for the regulators, the onshore regulators in India was always a challenge. It is not the same as Singapore, right? Which is what Singapore did 30 years ago. It is also not the same as China and Hong Kong, which is a 2-country policy, right? For India, we had to come up with a regime or a solution which allowed an ability to integrate both inbound and outbound. At the same time, it allowed a buffering. By buffering, I mean what is going on onshore remains the way it is. At the same time, there is an ability, a regulated supervision under IFSC, which allows all that goes on to be monitored, to be as international as possible, right? So I think it is in the right direction. We are very much encouraged by the way and the speed with which IFSC is putting together new frameworks, operating guidelines, and to just name a few, as you asked me, the global market access is a way for a resident Indian to participate in global markets through a gift broker, right? It solves both the points, wherein, as Anshul was saying, the resident Indian does not have to take the money out to Hong Kong, London, Singapore. It stays in the IBU account of the resident Indian in dollars in Gandhinagar. At the same time, a gift broker, which could be a subsidiary of a domestic broker or a subsidiary of a multinational broker such as ourselves, allows the resident Indian to participate. If you look at it very quickly, there has always been that worry in the minds of the Indian regulators. What happens if my depositors, what happens if my investors are taken for a ride, right, in the international market? By having this bridging mechanism of IFSC, there is a greater transparency. There is an ability to regulate, supervise, penalize if something were to go untoward. And therefore, the confidence amongst the investors, the depositors, the corporates is going to grow over a period of time. At the same time, the markets, the international markets will start recognizing the larger potential of the Indian corporates as well as Indian HNIs, Indian depositors, Indian investors, Indian family offices. So it actually, over a period of time, going to translate into something that is going to be bigger. Just to underscore the point of having a way to manage what belongs to us, ourselves, is also achieved through this twin regime of Gandhinagar and the rest of India onshore market. We have already, as you said, we have already activated our global market access. We think that the right way for a resident Indian to participate in international markets is not necessarily opening a brokerage account and just buying, selling anything and everything that they are hearing in media or elsewhere. There is a way for them to participate in a systematic manner, which could be a portfolio management service, an advisory service, or an international fund. The international fund that actually we are looking at is an inbound activity, which as many of us have understood now, compares and puts Gandhinagar regime on the same level playing field, such as a Mauritius or a Cyprus or any other so-called preferred destinations to route money into India. But now that it is in Gandhinagar, it is that much more easy for us or for many other domestic brokers to have business of substance. So all that was being challenged around, globally, as whether it is from the point of view of taxation or else or other reasons, is not going to be the problem. And I will make one final point, Supriyo, which is talent. The challenge of many of the other tax haven has always been the lack of talent pool. Right? Whether it is a single island country or it is even some of the new international regimes that have come about. Gandhinagar, in that respect and in a very contrasting manner, actually allows us to tap the talent pool of India, the domestic market. Right? So financial professionals, bankers, intermediaries, all of the compliance individuals, technology individuals, all of it is available just at a stone's throw away for us to tap into. I mean, we have a subsidiary in Dubai, Phillip Capital India. The challenge that we have is about the available resource pool, right? And therefore, the excitement is larger and bigger for us that we have the market, we have the talent, and we now have the regime. Thank you.
Thanks, Mr. Bhatnagar. And yeah, I mean, if I might add, we are also working on how to make it easier for people to come here and work. Although that's not strictly within IFSC's domain, but as you said, that is one area that has to be sorted out and environment created where people can feel comfortable coming and working here, and you build up a group of like-minded people who can then work with each other. Thanks for that very comprehensive reply. If I might come back to Mr. Chanda, can ask one more question. Mr. Bhatnagar spoke about inbound capital flows into India and how IFSC can be a major support of that. How do you think? How do you think the banks can help this process? If you have some ideas.
Supriyo, so today, if you look, the whole AIF market, which has grown about 850% over last 5 years, and most of these AIFs have set up their feeder funds, as Vineet mentioned, in places like Singapore, Mauritius, Belarus, where talent availability has been an issue, and hence the cost of setting up. And I have been myself an angel investor, so I know that setting up at these places is far more expensive also not as efficient as it can be, and it is already at IFSC. More so because of talent availability and the whole investment team typically sitting domestically out here, it becomes even more easier given the geographical advantage that IFSC has. So, and finally, the cost at which the banks can do the custodian services and the account services at IFSC will be far more efficient, which eventually will lead to better returns for the investors as well. So that's the role I see banks playing in this whole capital influx that our country is seeing.
Thanks for that comment. Mr. Barkada, if I might come to you, the purpose of Anand Rathi International, as you say, is to facilitate centralized access to trading in US dollar, in equities, indices, commodities, currency derivatives market out of IFSC. And can you help us by giving a brief roadmap of how you seek to achieve this, and what kind of support do you expect in terms of regulatory from the regulator and the policymakers to support your roadmap?
Thank you, Supriyo, for giving me this opportunity to be a part of this discussion. And thanks for your question. Now, as we are a brokerage house from in India, so always to expand globally, no doubt we have office in Dubai, but we were in a position to sell only a product, being a rep office in Dubai, which has been produced by Indian company. So being an Indian brokerage house, we were never allowed to sell anything which is a dollar denominated. Now, when we say for a rupee dollar contract or from a trading side of it, no doubt we also can use AIF, we also can use a PMS, but to target a client, two types. One is international location client, and they want to hedge their rupee dollar. So, or an NRI who remits a fund and he wants to hedge. So in Indian market, NRI were not allowed to trade in a rupee dollar previously. But when they are even allowed to trade, what they have to do is they have to remit a fund, NRO account, derivative, trade, pay tax, and take money back. So it is a long process. And as you understand in NRO, you are not allowed to repatriate money in a full, everything. But no doubt with approval, you can do it. But with the help of GIFT-City, now what happens is they give margin in a dollar term. They trade in a dollar term. Because in a GIFT-City, you don't have to pay income tax if you are an NRI. They, whatever hedge position they have taken or a trade-in position they have taken, whatever profit they make, they can take it back. So last 10 days I'm in Dubai. Because GIFT-City, which they have done a market show in Expo 2020 here, there's a lot of interest from, you can say, individual NRIs, as well as some of the corporates who wants to do a rupee dollar. And here I was so delighted after this roadshow, which has been done by IFSC along with NSE, IFSC, BSC, India INX, and it is a positive response. Another, apart from a rupee, because IIBX, which is the gold exchange, which is coming here, people are very excited. Some people are apprehensive about the compliance part of it, and some people are very confident saying that, okay, our regulator now, because it is a common regulator there, and because of common regulator, they feel now our everything to even setting up an office and all that will be very easy. And people are actually, I have met at least 40 people here last 10 days, every day 4 people. And they are so delighted. Everybody wants to do a rupee dollar because they can start immediately, and they want to remit a dollar. And another important thing which we as an industry needs to do is do a roadshow across all world, because without awareness of a GIFT-City, because it is a very good idea of a government, but if we don't market it or a roadshows by everybody, exchange, regulator, and the intermediary, this development will be a little slow, but if we all come together and jointly, if we develop and understanding we give it to the party, is definitely like my view for a GIFT City. No doubt I'm involved last 4 years, but last 10 days it has suddenly changed. And definitely volume in a GIFT City will definitely come, looking at all tax advantage we have given, ease of operation we have given. And when I told people within a 15 days or a month time, you're up and running, you will have all permission in a place, people were surprised. So, and I said, you try, definitely it is possible. And one, two client was already from a company there. They were very delighted. And bank account is really opening fast. And at least I made here some of the people, they have opened a bank account with the many people. And couple of banks are really active here who are opening at least 30-40 account a month, which is a very good speed. If one bank here whom I met is opening 30-40 account a month, if all bank I say 20-25, then it is a very good step. And if I talk about client who are Indian and LRS route, they are also very excited to buy a US stock and all that. 25th November, very good step where now Indian brokerage house also can provide a global access. So I think once every brokerage house does the tie-up and sell this, so Indian client also gets the advantage of a global access, and foreign client also coming here and putting money. So I feel inflow will be very large for a rupee dollar position, for a commodity position, and for a corporate who were hedging in international exchange, like say corporate like Sterlite or a Tisco, Sterlite for a copper, aluminum, zinc. They were taking a facility of a global brokerage house because Indian brokerage house were not providing the same system. Now with GIFT City, you can provide that. So all client who has a RBI permission to hedge international exchange, they will get an Indian service and global exposure, and all NRI client across the globe who were investing in other market or say SGX Nifty and they wanted the Indian exposure, they will get a benefit. So I feel inflow of a money in India because of this statement, structure will be very high. And compliance wise, because GIFT City is doing like an international compliance and not the Indian style of it. No doubt initially we did some of the structure which was looking at an Indian market, and now that we are changing, and that has been reflected when I'm talking to people or a client. So looking at this client feedback, rupee dollar definitely trade which is being happening in say a DGCX or in Singapore will definitely shift in a GIFT City because product is same. So that's it from my side.
Yeah, thanks a lot, Mr. Barkada. I mean, it's very good to know that, we are at least making a mark in places like Dubai and Singapore. And because that's, once people come to know about us, the next step can happen. I think you brought out the issue of, rupee dollar trading. And I think it will be remiss if I don't talk about the NDF market there. I mean, the OTC derivative market in rupee dollar, which last year RBI, after a long time, allowed Indian banks to participate in that market, provided they have a branch in IFSC. And I think many Indian banks have already started doing transactions. Maybe, Mr. Chandak, would it be, can I ask you to, since you are also participating in the market, I mean, you have the option of participating out of, the domestic area, and you also have the option of participating out of your IBU here. Do you find any advantages of operationally, I mean, apart from the tax breaks, which are all there, operationally, do you think, because the tax breaks are going to end at one day, so we can't rely on the tax breaks to sustain. So do you think operationally, do you find any advantages vis-a-vis the domestic area?
I think that's where regulator has done a tremendous job of putting in few things in place, which has helped us to also ramp up our volumes at IBU as well. One is basically this nostro accounts that banks hold in IBU are allowed to take or receive collateral for the derivative transactions, even if they are done in India by the parent bank with a counterparty residing outside India. So what it allows you to do is centrally manage the whole operations of collateral management and helps you achieve economies of scale as well as efficient use of collateral. So that's one part of it. The other way, if there's an agreement between the two counterparties, re-hypothecation of collateral received is also allowed by IFSC. This coupled with the previous point that I mentioned is likely to reduce the cost of collateral placement and also basically make the whole operation a lot more efficient, particularly as we evolve the capital market business in IFSCA. Finally, IFSCA permits full substitute compliance where if there are two counterparties, one IFSC registered and one non-IFSC entity, and the margining requirement of the non-IFSC entity is different, it's deemed acceptable compliance under IFSCA margin regulation that if it is complied, then they don't need to comply with the IFSCA guidelines, hence reducing the compliance cost. So these few enablers regulator has given us, and thanks to that we are seeing that increased volume that we are seeing every day on our counters.
Thanks a lot, Mr. Chandak. NDF market, as you would know, is a OTC market. It's a market which is on the basis of relationships, which take time to evolve. But still, I think the volumes have, as a regulator, I can assure you that the volumes have started going up, dominated by interbank. But we are also seeing a few client deals also coming through. So we hope that this market, we are able to achieve what the whole regulation around NDF was meant to do, that the pricing of rupee should to a large extent happen out of India. That was the goal, which for a long time people felt that it would be completely settled and, not settled, rather the market making would happen outside India. This is an attempt to bring it back onshore. And I think, although it's early days, and especially the situation being what it is, with COVID and all that, but still, I think there have been some impressive gains in that area.
Supriyo, sorry, I just wanted to add one more point.
Please.
Beyond NDF, also the derivative market is becoming far more robust at IBU. We've got some interesting stuff where, a client of ours was looking to do an acquisition in Australia, pharma client. And, we had limitations in terms of how we could fund him in Australian dollar. But how we structured is we gave a long-term loan through our gift branch in USD terms and then swapped it on deliverable basis in Australian dollar for his end use. So this enabled us to kind of structure the whole loan in a way how client wanted it. So these are few interesting things that have happened at GIFT, which allows, a vast area of or plethora of deals that we can do and help our clients on.
Great. I mean, that's great to hear. And that's exactly the type of transactions which, if GIFT had not been there, would have been, serviced by, foreign bank in Singapore, because the client needs the money. I mean, the client won't stop because we don't provide it. So the client will go to somebody. So no, that's great to hear, Mr. On that. And I think we have broadly covered the areas. If I might, if any of you would like to add or supplement, maybe for 1 or 2 minutes, or otherwise we can close the session.
In fact, one last bit on, given the whole new or rather way forward of how fintechs can play a role in this whole setup. I think there are 2-3 areas as banks, we believe that there are few gaps. For example, today, if I do a non-fund facility for my client and the documents have to physically move to a bank, say for a collection in say Dubai or in Singapore, that extra turnaround time is there. And, if basically there is a fintech which is giving a solution where all this is digitally moved, and this goes not just for the trade transactions, but also when we will onboard our NR customer base, and a lot of KYC will happen through video and different modes. So that is one area which I believe that where they can play in. Plus, USD settlement today, because it's nostro to nostro, there is little bit of lag that how you cite funds. So if there is blockchain technology that can come into picture and can help this whole payment processing a little more efficient, that will also help the capital market business, because as that business becomes bigger and the amounts go bigger, whether intermediaries, exchanges, all of them would like to kind of see this efficiency kicking in. So these are few things which I thought, apart from these digital led broking houses which will come in and evolve this whole space, but some of these problems, if solved by fintechs, I think there's a potential for a larger market for them as well.
I wanted to add one more dimension to this entire thing, Supriyo, which is about the legal jurisdiction of Gandhinagar, right? So as you rightly pointed out, tax holidays and tax breaks are a short-term measure. It's almost like an early bird offer, right? And an early bird offer expires, and what stays with you is the long-term story. So as a long-term story of Gandhinagar or Gift City or IFSCA, it is important to deliver on that buffering that I was talking about earlier. And by buffering, I mean that if both inbound and outbound experience of the money or those who transact through Gandhinagar is going to get subjected to the same jurisdiction of judiciary that is available onshore, and we all know either the bureaucracy or what is the time period that it takes to resolve disputes becomes the experience of Gandhinagar and Gift, then that is a big risk that we must all be alive to. Because we are in the first phase of the growth or evolution, as you pointed out in the beginning, we are all excited about the new things that are happening. But what would come to everybody's attention will be the longer experience in the 5th year and then the 7th year. When transactions happen, there will also be disputes, there will also be complaints, there will be civil cases, and how they get resolved and over what period of time is going to define how long and sustainable the story of Gandhinagar will be.
Anshul was saying, I'll just add one point. Banking side, what he told, it is very important to develop. Reason behind that is exchange, which we define. There the settlement requirement is T+1. If mark-to-market call is there from a client who is an NR, if he remits the money from international location, as an intermediary, I'll never receive a fund in a T+1. So now what happens is this is a mismatch. So for us, it becomes really difficult, or for a client also becomes a real difficult, because he has to park a money more than what margin is required for anticipation of mark-to-market. Whereas globally, where this type of exchanges are there and the banking system is there, transfer is very smooth and very fast. So for a development of a gift city, this step, all banks together coming with, like, some internal transfer, or if account in a gift city fund gets transferred very fast, will develop, whether it is a capital market, equity, debt, or a currency trading, or a commodity trading, this will help. And to add to Vinit's point, compliance out here, out of 40 people whom I met, this is the first Anandati visit for a gift city business. 39 have asked how the settlement process in case of dispute will happen. And everybody looking at to come to gift city, not for a year or a 2 year. They are coming in a gift city for a 10, 15, 20 or AGCS. Or if they are saying the same benefit, if we are getting what in Dubai, same in a gift city, then why not we set up in a gift city? Because ultimately we are Indians. So that biasness is there. If somehow we give that confidence that all settlement will be like an international standard, or way it happens in a Dubai or Singapore or a Mauritius, I am very bullish that lots of NRI and lots of business will come to Gift City.
So what I'll do is I'll conclude by addressing some of your points and then just making a few points of my own. I think about the KYC part, we are, I think, very close to having our own KYC norms. Till now, we were following the RBI KYC norms. which has its own limitations. So the KYC norms, which are pitched towards international standards while complying with the requirement of PMLA, is in the works, and I'm very hopeful either this year or early in the new year we'll be able to roll that out, which will, I'm sure, to a large extent solve many of the problems which are being faced today. About the dollar settlement, yes, we have been studying the Hong Kong offshore dollar settlement mechanism, and we'd be glad to know we are internally pretty well advanced to replicate that here in IFSC. We are looking for a bank which can be the clearing bank, and we are looking for somebody who can run the operation. So there'll be a clearing agent and there'll be a clearing bank, so that's the structure most offshore foreign currency clearing operates. And we are hopeful that is like 3 to 6 months away, but we are pretty sure that that's feasible out of here. So I think, and the final part about dispute resolution, we have tried to tackle that in 2 ways. One, we have permitted and not or encouraged, I will not say encouraged, but we permitted our regulated entities to choose their jurisdiction. So technically you can have a contract in IFSC which is under the UK jurisdiction. We don't have a problem with that, because that is a jurisdiction where the rules and laws are pretty well understood. Until we get our laws into place by whatever means possible, we think that's a via media that can work well. And we are also trying to have an arbitration center here, which will require a bit more effort, but that's something that we're doing. So let me just then conclude this session. And I think the opportunities are there. If IFSC is India's international financial center, today largely it will be catering to India's capital needs and in the need of Indian residents to invest abroad to diversify their portfolios. But I think there is also a vision to become a regional IFSC in the medium term, and with things the way they are, and if things fall in place, to be a global IFSC in the long term. And I think the regulator, from the regulatory point of view, is well aligned to what is required, and we are always open to conversation with the participants, with the market players, and even if you are not directly connected with the IFSC today, we are happy to talk to you. So I think everybody of us should take this opportunity of starting a conversation about how their businesses can be supported through IFSC. So let me conclude by thanking all the panelists for giving time for this conversation. It was pretty revealing, and I hope that your businesses here grow and you sort of become the leading lights of other businesses to come into IFSC. So thank you, and all the best.
Thank you, Supriyo.
Thank you, Supriyo.
Thank you, everyone.
Thank you.